Greetings, everybody. Welcome to the Liberty Call. Today is Monday, February 13th, 2023. Hope everybody's having a fantastical day out there. On the docket today, we have the weekly economic update, how the major indexes did today, recap of today's market, and I got an article here from First Trust about January's data. So that should be very, very interesting. If it's your first time watching the Liberty Call, please give me some thumbs up, likes, shares, and subscribes. I would greatly appreciate it. Like I said, I hope everybody had a fantastical weekend out there. The Super Bowl was yesterday. A pretty decent game. I didn't listen to any of it. I kept it muted and I was listening to podcasts. And my wife I think she was listening to a book on her phone. So we watched the game, but we didn't really pay that much of attention to it because we didn't really have a dog in that fight. But it seemed to be a pretty decent game. Went down to the end, and Chiefs pulled it out. So their QB. What's his name? Dang it! Of course, I'm on camera and completely Mahomes. Yeah, Patrick Mahomes. He is a fantastic quarterback. I mean, he's got the agility of a Michael Vick and the smarts and the precision of a Peyton Manning or Tom Brady. So, I mean, he's a pretty deadly weapon out there on the field. So anyways, all right, you didn't come here to hear me talk about football, and baseball season is just around the corner. Pitchers and catchers are going to be arriving in the next couple of weeks. So let's hope my Astros have another fantastical season. So let's go ahead and jump into the numbers and see how they turned out for today. The Dow Jones was up 1.11%, closed at 34,246. S&P 500 was up 1.13%, closed at 4136. NASDAQ was up 1.48, closed at 11,891. Small caps are up 1.06. The VIX fell 0.78% today. It's currently holding at 2038. Let's see here. Canada was up 0.44. Brazil was up 0.78. Mexico was up 1.11%. Hopping across the Atlantic, Germany was up 0.58, UK was up 0.83, France was up 1.11, the Euro stock's up 1.03, Netherlands up 1.39, Spain up 1.02, Italy up 0.63, Switzerland up 0.71, and one of the few red spots on the screen here, Portugal down 0.9. Russian exchanges were mixed. The MOEX up 0.12, the RTSI up 0.63. And in the overnights in Asia, Japan was down 0.88, Australia down 0.21, New Zealand down 1.05. In China, the Shanghai was up 0.72, the SCSE component up 1.14, China A50 up 1.09, DJ Shanghai up 0.73, Hang Seng down 0.12, and the Taiwan weighted down 0.27. So for most of the day, other than a few laggards here, a couple in Asia, and then Portugal being in the red, everything else in the green. So not sure why everyone's so excited. I guess could be some of the reports coming out this week or some big news, but everybody's hoping that the Fed's going to telegraph that they're going to slow down on their rate increases, but I don't know. I just don't see it happening anytime soon, but keep hope alive. All right, let's go ahead and jump into this week's weekly economic update. The week on Wall Street, stocks drifted lower as a week of mixed earnings reports and resurgent worries over Fed monetary policy dragged on investor sentiment. The Dow Jones Industrial Average slipped 0.17, while the S&P 500 declined 1.11. NASDAQ lost 2.41, and internationals dipped 0.3%. The rally stalls. Stocks struggled last week, weighed down by rising bond yields, a firming U.S. dollar, geopolitical tensions, and generally unimpressive corporate earnings reports. Perhaps the most consequential overhang was the potential direction of monetary policy. Initially, traders were relieved by comments made by Fed Chair Jerome Powell earlier in the week that he had not struck a more aggressive tone following the strong employment report released after the FOMC meeting. The relief was short-lived, however, as anxieties over future monetary policy resurfaced, exacerbated by comments by one Fed governor who suggested restrictive monetary policy would be necessary for a few years to tamp down inflation. And boy, people did not like that news that, oh my God, we're going to have high interest rates or normal interest rates for an extended period of time. How the world's going to fall apart. Cats and dogs are going to be living together. Complete anarchy, to quote Bill Murray. All right. Next up, Powell repeats himself. Investors were particularly eager on Tuesday to hear Powell's first comments following the strong employment report that previous Friday. The concern was that the surprise job number would change Powell's outlook coming out of the last FOMC meeting. Powell instead repeated his post-FOMC meeting remarks, which were that a deflationary trend was underway and there remained a distance to travel before the measures taken tamed inflation. The Fed would be data-dependent in making future rate decisions. Powell also pointed out that the robust job growth showed why it may take so long to reduce inflation to the Fed's target level. All right, economic data coming out this week. Tomorrow we have the CPI, the Consumer Price Index. Wednesday we have retail sales. Thursday we have jobless claims and the Producer Price Index and housing starts. Friday, the index of leading economic indicators. This week, companies reporting earnings. Tuesday, we have Coca-Cola, Zoetis, and Marriott. Wednesday, we have Cisco Systems, Shopify, and Albemarle Corporation. Thursday, Applied Materials and the Southern Company. And Friday, we have John Deere. Who doesn't love their green tractors? All righty. Well, that's everything there for the weekly update. Let's jump over to today's market recap and see what they had to say in that article. Here, let me bring up my notes. Wall Street saw a rally on Monday as investors awaited inflation data that would indicate the future path of the Federal Reserve's interest rate hikes. The four tech-related heavyweights, Microsoft, NVIDIA, Apple, and Amazon rose more than 1% and contributed the most to the S&P 500's gains for the day. Microsoft stock rose after Stifel raised its price target on the company and noted its attempt to surpass Google's search dominance through integration with ChatGPT. Investors also are closely watching January inflation data due on Tuesday to reassess their bets on the central bank's monetary policy. The recent loss of ground in Wall Street's main indexes was attributed to Federal Reserve Chair Jerome Powell's warning that interest rates may need to rise higher than expected in the bank's efforts to combat inflation. Meta Platforms saw a 3% rise after a report that the company was planning fresh layoffs. Of the 11 S&P 500 sector indexes, 10 rose, led by the information technology sector, with the energy index being the only one to dip. The S&P 500 saw a 7.5 to 1 ratio of advancing to falling issues. Fidelity National Information Services, however, saw a 14% decline following its decision to spin off its merchant payment business. As U.S. quarterly earnings reports wind down, 69% of the S&P 500 firms that have reported so far have exceeded profit expectations. Fourth quarter earnings are expected to fall nearly 3% from the previous year. The S&P 500 recorded 4 new highs and no new lows, while the NASDAQ recorded 60 new highs and 50 new lows. All right, so that's everything as far as the market summary for today. Got one article here, comes from our friends at First Trust Portfolios, Brian Westbury, their chief economist. It's titled January Data Get Hot. All right, let's read through this. The economic reports for January are expected to show strong numbers with potential record-breaking inflation, retail sales, and industrial production and housing starts. The money supply measured by M2 surged more than 40% in the 2 years ending in February of 2022. And this has led to an increase in inflation. Analysts had previously predicted a 1.8% increase in consumer prices in the last quarter of 2022, but this has since been revised to 3.3%. The core inflation rate, excluding food and energy prices, again, who eats or drives? I mean, nobody, has also been revised upward to 4.3%. Retail sales in January are expected to be strong due to a combination of factors, including warm weather, high auto sales, large cost of living adjustments for Social Security, and government payments during the COVID pandemic. Housing starts are also expected to come in higher than expected due to warm weather, the fading sticker shock of higher interest rates, and easier building conditions. Industrial production may be an outlier as warm weather could lead to a drop in utility output, but a boost in factory output and mining. All right, so that's a summary of that article. That's everything I had to cover for today. If anyone needs anything from me, please go to dsafinancialgroup.com. All my contact information is there. Hope everyone has a fantastical evening, and I'll talk to you guys next time. Adios.